Hello, everyone. Welcome to Money Minutes. This is Zak Gardezy. I'm the host of Money Minutes. I'm also the founder of Wealthstone, a private wealth management firm based out of Scottsdale, Arizona. I'm also a certified financial planner and a private wealth advisor. So, here on Money Minutes, I'd like to share with you some of the latest market headlines and my outlook for what's ahead. So, for this week's episode, we'll focus on three major topics. One is, of course, Nvidia's latest earnings report and what that means for artificial intelligence. We'll also talk about the latest on market volatility and what's behind it all. And then I'll talk about inflation and how are the central banks around the world going to react to some of the latest inflation readings around the world. So let's get right into it. So Nvidia's earnings report is out, and it was another blockbuster earnings report. So from a year-over-year perspective, their revenues grew 94%, and from a quarter-over-quarter perspective, they grew revenues at 17%. And we all expected this to happen. We knew that Nvidia was going to have a strong report, but really it was exactly what the market wanted. Now, you may be wondering, well, why did the stock go down after reporting earnings? Well, even before earnings were reported, the stock was down, and a few days before, there was some news about the Blackwell chips potentially overheating and some issues that could cause to the delivery of those chips. Now, of course, Nvidia executives talked about how that was an issue, but they've already alleviated it, and Blackwell demand is higher than they even expected. So, the reason why I think that the stock was down after hours, it really had a lot to do with a million random things. For example, there was investors who wanted to take some profit off the table. There were some concerns about their profit margins having to be a little bit lower. And again, as I talked about, the executives talked about improving those margins into next year, and it had a lot to do with the Blackwell rollout. So I think if you're a long-term investor, which many of us are in Nvidia, and we're looking at this from the perspective of artificial intelligence and technology and what all of the things Nvidia brings to the table, you're really looking at this and going, you know what? We had another very strong earnings report. There was some great commentary from their CEO, Jensen, who said some things about, for example, the next wave being potentially AI and AI robotics. We talked about that when Tesla released their Optimus robots and what that could mean for the future of society, quite frankly. Jensen talked about that. He also talked about moving from traditional coding to machine learning, and that basically every company will be doing machine learning in the future. There was also some talk about sovereign AI, where basically we're starting to see countries around the world starting to adopt more AI and develop the infrastructure that's needed for that. So there's a lot of optimism around AI. I was wanting to hear about the numbers, but as I talked about, we expected those to be good. But really, I wanted to hear from Jensen what his perspective and outlook was for artificial intelligence. And as this earnings call played out and as we analyzed the report, it's quite clear the artificial intelligence train is not slowing down anytime soon, and the demand is sky high for Nvidia's products and many of the other products across the supply chain that we talk about on Money Minutes. So overall, it was an excellent earnings report. And if you're an investor in Nvidia, like many Wealthstone clients are, this is welcome news. And if you're a long-term investor, as I talked about, great news. And if you're somebody who invests in an index fund, like for example, the S&P 500, well, with Nvidia being one of the most valuable companies in the world, and some of these indexes being market cap weighted, so the more valuable a company is, the larger of a weighting it has in that particular index, this is even great news for index investors as well. So I think a lot of the optimism around AI, thanks to this earnings report and some of the others that we've gotten this quarter, is going to fuel it into the rest of the year and into 2025 as well. So great news across the board from Nvidia. So market volatility is up. One way you can track market volatility is by looking at the VIX. Now the VIX is up over 22% in the last 5 days. Now, there are some reasons for it. Part of it has to do with NVIDIA's earnings report, right? It's a highly anticipated event. We're seeing it every quarter and how the market's basically just waiting for NVIDIA's earnings to determine, is the market going to go up or down, or is this a good thing or a bad thing? So much is riding on NVIDIA's earnings report. But quite frankly, right now, I think that's a smaller part of what's happening on the volatility side of things. I think a lot of it has to do with the war in Ukraine. And so over the last few days, we've seen the United States and other Western countries give Ukraine permission to use long range Western weapons to attack Russia. Russia has responded by threatening nuclear war. There's a lot of talks about World War III, and there's just so much fear and tension rising in Europe based on these actions. And so, whenever you see more uncertainty, that's when you see market volatility creep up. Now, I will say investors often think, well, what does this mean for my portfolio? Should I make any adjustments to it? Typically, the answer is no. Whenever you see market volatility spike up because of some sort of geopolitical event, it rarely ever makes sense to just start making wide scale adjustments to your portfolio. But as I've talked about all year, here at Wealthstone, we focus a lot of our investments in the domestic space as opposed to international markets, and that's played out quite well for us. And so I think if you're an investor and you're looking at your portfolio and maybe you have a lot of exposure to Europe, you may be more concerned than most. And so it's not a bad time to look at your portfolio and assess where your risks are. But I don't think this is a time for you to just go in and sell out of the market or make some sort of a crazy adjustment. There's a lot more to be seen. And it's possible cooler heads could prevail. There's been a lot of threats of nuclear war basically since the war in Ukraine began. And so, could this be just another empty threat? Or could this be the beginning of something more serious? And so, it's something we'll be paying very close attention to. But that explains a lot of the increased market volatility lately. Okay, so there's some fresh inflation data that I think we should all talk about. So, in the United States, Canada, and the United Kingdom, inflation has gone up. Now, the good news is, at least for the United States and for Canada, inflation went up just as much as the economists were predicting for the month of October. Now, in the United Kingdom, inflation went up more than expected. Now, of course, overall, across the board, it's basically what we expected to happen when central banks around the world started lowering interest rates. The side effect of this is potentially higher inflation. Now, what central banks will be paying very close attention to as they continue down this path of lowering interest rates is just how much higher is inflation going to get. At a certain point, if the data looks bad enough, you could see central banks pausing their interest rate cuts or, in a worst case scenario, actually raising interest rates. So, from an investor's perspective, you may be wondering, well, what should I do with my portfolio? Should I make any changes? And similar to as we talked about in the previous segment about geopolitical events, you don't really want to make any big shifts in your portfolio just based off one or two or three, negative inflation reports. What you want to do is look at the trends. When the Federal Reserve or central banks around the world are assessing what they're going to do with interest rate decisions, they're also looking at trends. And so you look at the trends and you try to get a determination of what's going to happen with interest rates. Now, if you're an investor in the stock market, we've seen the stock market, at least here in the United States, be resilient regardless of these higher interest rates. Now, of course, lower interest rates is a great tailwind and a boost for the stock market. But if interest rates sort of remain a bit more elevated than we thought, I don't think that's necessarily a bad thing, especially if it means more prudently getting down to a lower inflation rate without risking some of those negative side effects. Now, as a fixed income investor, or maybe somebody invested in the private credit space, you're looking at this and going, you know what, this just means that my bonds and my private credit investments are going to continue to pay me these higher income levels for longer. And that's great news as well. So I think across the board, as an investor, there's not really any serious need to have any alarm or concern or to even look to make any big shifts in your portfolio just based off of some of the latest inflation data. But it is something to pay very close attention to. And I'm curious to hear what central bankers around the world are going to react as they see some of this continued inflation data coming in. And here at Wealthstone, we pay very close attention to the latest inflation data and adjust our views according to what's going on. So at the moment, I'm not seeing any clear reason to make any adjustments to portfolios or to even shift the view that I think we'll still get interest rate cuts. I still think we'll get some in December, and we'll just have to see how much and what Federal Reserve Chairman Jerome Powell and others have to say about the trajectory of rate cuts in 2025. And so this concludes this week's episode of Money Minutes. Thank you so much for tuning in, and I hope to see you all again next week.